Welcome to the National Real Estate Network video training program. This video is part of a series designed to help beginning and experienced real estate investors with the different aspects of purchasing and investing in properties. Be sure to become a member at 27monthlymeetup.com.
I want to thank everybody for being here. This is going to be a seminar on find, fix, and flip. And my name's Mark Maupin. A little bit about me. I started buying properties and really buying them heavy in the 80s, early 80s, maybe before you guys were born. And we went, my wife gave me a choice of ballroom dance, ballroom dance, square dance, or a real estate investing class. We took the real estate investing class, and 6 months later, I had bought 26 houses. The guy that came in and spoke to the real estate investors class was like a buyer broker and was doing a really good job of finding homes in the suburbs. And at that point in time, we could buy them on land contract. And everything he bought me, I made really, really good money on. And my wife was a full-time school teacher, and we were renting the properties out. And she would overkill on talking to the tenants. She would actually read the lease to them. It was painful. It would take like an hour and a half for her to get through a lease. But she did such a good job of explaining stuff, and the tenant selection was good. And then I was the guy that likes to spin a lot of plates. So I said that wasn't enough for me. I wanted to start buying in Pontiac. So within about 3 years, I had 325 rental properties, and I was heavy duty, and I majorly went out of control. I rose to the level of my incompetency. So then I had to get out of the rental properties, so I learned how to do rent with own, lease options, and did really well at that, and got out of those. And then I just got into buying like 8 properties a month and selling them. I got into paper. I was doing really good with that. Then I got into wholesale later. So I've been at the game a long time, and when the market crashed, I was over leveraged, and I was one of the first people to go down when that happened. So I got to start all over. And today I make my living. I do internet marketing for people that you would know would be like Mr. Roof, Rizzo, the dumpster company. You guys might not know that, but they're the largest dumpster hauler in Michigan. I do a lot of work for people where I bring them up on the internet. So I've learned a whole new trade out of that. But I've always ran a local real estate club. And then one of the companies I was doing internet marketing for is Volunteers of America. And they're running ads to have houses donated. So I'm helping run that program with them. So on the donated houses. So I'm back into this looking, and I'm back into doing wholesaling, where we're actually out chasing houses, and we've got like a mentoring group that we're working with. So that's kind of a little bit about my background. So what we're going to do today, the agenda, is we're going to talk about where to find property, how to price property, how to negotiate a buy, ways to market yourself when you're looking, how to title a property if you get one, how to fix up or rehab a property, we'll get into it, and where to find subcontractors to work on your properties, or how I did it. And Ken, you can interrupt anytime you want. You've got a really experienced investor in the room. So Ken's going to actually speak tonight too and talk about what he's done. So we're going to talk about exit strategies, so like once you've got a property, being able to get out of it, and then talk a minute on the mentoring program we're currently doing. So what determines the price that you're going to pay for a property? And Chris, I might have you do some writing on the board. So anybody got an idea what would determine the price you'd pay for if you're going to buy an investment property? How you determine what you want to pay for one? Yeah, so what?
Once you fix it up?
Yeah, so what's the market value of the property, which is real key. So, but the real question for you is how much profit do I want to make? So that's where we're going to start. So just for the sake of doing this example, I'm going to say that I'm going to buy a house and I want to make minimally $20,000. That's my objective, okay? So, so what we want to make in profit, we're going to write 20,000 down, and then we're going to determine what the rehab is. And before I get out of here tonight, I'm going to walk you through some of the ways to determine rehab costs. So let's say that the rehab, after I walk you through it, let's say our rehab cost comes up to $10,000. So when you're looking to buy a property, you need to determine that when most people are buying a property, they're forgetting about the fact that they've got electric, heating, they've got mortgage cost, they've got insurance cost, and water cost, and they've got all this cost associated with the property. So you buy the property, you rehab it, and then they say to themselves, okay, well, I can rehab this property in 3 months. But I can tell you from experience, and I'll let Ken address it too, if you think you can do something in 3 months, it's probably going to be 6 months. And if you think the rehab cost is going to be $5,000, it's probably, for the sake of when I'm doing this, or even when I was buying it for myself, I doubled my rehab cost. I would sit down and calculate it, but for the sake of my buy and getting a good deal, I would double my rehab cost. So, so for the sake of this property, we're going to say that our goal is to make $20,000. We're going to say all those costs that I think I can fix the house up in 2 months, and I think I can get it sold in 2 more months. I'm going to double that time out, and then I'm going to double my cost, and we're going to say all that totals $10,000. And I'm just grabbing these numbers out of the air. So in the property we're buying is, you know, I'm sorry, Chris, the rehab cost, we're going to make it 20. Okay, so so all the water and all the mortgage costs and that's just the rehabs at 20. All that's going to add up to 10,000. We're just making numbers up. But you can see how that would add up to that pretty quick. So now we're into this thing at 50 grand before we've got it sold. So now that we know that the price, the retail price on the house is 90. So then the question is what's the top dollar you can pay for the house? So you got to take your profit, your rehab cost, and you got to take all your holding costs and total them up. Then they're going to total $50,000. So you know that the most you can pay for the house is $40,000. Everybody follow that? And everybody that does this, new people doing it, they totally underestimate what those costs are going to be. I mean, and the other thing is if the biggest mistake I see people making, and I can look back at myself because I'm a major plate spinner, was tackling too much stuff. There's always deals. You should tackle what you can chew. So, one at a time starting out. Yeah.
Too many at once.
Yeah.
Then you really adds to your holding costs because you can't get it done fast enough.
Yeah, so you end up in big trouble. And that was like one of the major contributors to sinking me. I was buying those 8 houses a month and rehabbing them, and I was getting them all sold. I had the crews. I was in the city of Pontiac. I had like a regular machine going. I was doing really well. I woke up one morning, looked at my wife, and said, if I can do 8, I can do 80. And I went crazy buying properties, and I rose way beyond my capacity to handle stuff. I mean, I had contractors stealing from me. I was totally out of control. But when I had 8 houses, I would meet every morning. I would meet my contractors at Home Depot. I would buy all the materials. And I was in the city of Pontiac, so within 5 minutes I could be at any location. So I was able to be in control of that. So you got to really watch it because. Oh, I was a full-time investor. Yeah, I started out when I first started with those 20 some odd homes. I was working a full-time job then, but the homes that I was buying were in pretty good shape. And my wife was a school teacher at the time, and we were like handling it, you know. But I'm a complete workaholic, you know. So there's a thing called social life too. So you got to balance it out. What, in the 80s? What? It was all land contract buys, and I can't even remember what the account. 16%. Could be, but we were getting them on contracts, and we were putting low down, and then there was a tremendous abundance of properties, you know. And then the whole market shifted, you know, and then the property values just skyrocketed. So all those suburb properties are really good, and they weren't spectacular homes we were buying, but they were all they weren't in Pontiac. They were all like in Commerce and White Lake. I don't know how to describe the properties, but they were like, you know, 3-bedroom, smaller homes, most of them. So is everybody pretty clear? Like, you got to really, when you're looking at this, you got to really think through your pricing.
By clicking the link in the description below, you can purchase the full version of this video in all the forms mentioned within, for only $7.99. Or, if you like, you can get access to all of our real estate investing videos at 27monthlymeetup.com. The cost is only $27 a month, and includes all past meetings, 3 new meetings a month, plus all the forms mentioned. Thanks for watching.